Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The Australian dollar has gained strength over 3 consecutive days and now clearing the 60-day simple moving average around 65.80. The US dollar, meanwhile, was a little bit to the flat side of 104.20. Investors are now preparing for the up-and-coming US monthly jobs report, while also considering the cautious remarks made by the Federal Reserve officials. The March non-farm payrolls is anticipated to rise around 200,000 with an expected unemployment rate around 3.8%. In February, job growth in the US reached 275,000, so the number is a little bit lower, along with the unemployment, which was around 3.9%. A jobs report surpassing expectations may result in higher yields and could reinforce pressure on the US Federal Reserve to maintain elevated interest rates longer than June. However, the market is still around 60% expecting a cut of 25 basis points in June, so no doubt the upcoming data is crucial. So do keep an eye on the non-farm payrolls that comes out later today. Looking at the technicals, well, the market is still somewhat bullish for the Aussie. So I do feel that since clearing that 60-day moving average does open the path now to 67 to 68 cents as a broader target, with any pullback finding support around 65.5. The euro posted a gravestone doji overnight and leaving the market a little bit mixed today. In light of the New York close though, I still anticipate further bullishness and therefore looking on towards 109 to 110 as a potential target, and with the intraday support level seen around 107.75 and beneath that the key point which is around 107.10.25. After many attempts at that topside level, also seen as the Bank of Japan's intervention area, which was last noted back in 1990 around 152, we can see that the decline is now given somewhat a bearish pattern due to the RSI breaking the midway point and also the MACD remaining somewhat heavy. We now await the level of 150.5, which would reaffirm the engulfing candle here, or the bearish outside range day, and initiate the pathway towards 149 area. Any upside attempts should continue to fail. Sterling a little bit mixed after stabbing the top side close to 127 and backs away. But I still feel the technicals are firming up and therefore could see a rebound that looks towards 127 and maybe onto 128, and with the support seen somewhere around now 126 to 125.5. Having a neutral view for the last couple of days, I'm now seeing further weakness coming back into play that could support a strategy to a bear case. If we see a break beneath the level of 2,268, then that would open towards 2,254 and reassess from there. Any upside attempts still leaves little to suggest to support any trade. Wrapping up with oil, the market still remains somewhat bullish after it powers higher, and I still hold no view to the top side due to the fact since the break of $83 we are somewhat to the extreme side of overbought and the ADX is overheating, so I do expect to see eventually a pullback that could give us significance to the bearish case and back towards $83 a barrel. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report. I hope you enjoy the great start to the new weekend.